Hey everybody, welcome to Trading the Close. My name is Gareth Soloway here at verifiedinvesting.com. Lots to discuss today. Markets again generally a little quieter, a lot of chop, but everyone is looking forward to Jerome Powell's speech tomorrow at 9:30 in the morning, and then the 10 a.m. JOLTS data, which is job openings. How many job openings are there? Well, yet last month we were at about 8.05 million. It's expected to drop decently this month, and we'll get those numbers tomorrow at 10 a.m. Overall, we saw Bitcoin chopping around a little bit today. The big mover in the commodity space was oil. We're going to talk about some three major factors that level just, or that commodity just hit. So again, let's get into the action here on the charts. If we bring that up, bear with me here as I want to just flip over to it, and let's look at what the markets are doing. So right off the bat, here's your heat map. You can see generally Microsoft green, Apple green, NVDA basically flat to positive. They are anchoring the markets today. So the big boys are keeping things floating. By the way, how do I know that the big boys are keeping things floating? Number one, the Russell 2000 is negative today while the S&P is flat to positive. All right, so let's take a look right here. What do we have? We have the Dow is up about 23 points, the Nasdaq's up 120, and the S&P is up 7. So again, Dow barely up because a lot of the mega caps aren't in the Dow. The S&P again is trading fractionally higher. Same thing, it's more diversified. It's 500 companies, and the Nasdaq again only 100 companies, the Nasdaq 100, and that is being pushed up by the Apples, the Microsofts. Here you can see Amazon's green pretty nicely as well, and of course a couple of the other players. Notice over here, I always like to look at this area. When you just look at it, look at, again, generally gray to red over in this vicinity with these few green spots that are bigger, and those are the mega cap companies bringing up the markets. Oil real quick, oil's having a good day, 2.5% gain. Gold is just up $4, and Bitcoin is up about 400, which is only a 0.6% move, not a big move in that respect. All right, I do want to get into the charts here, so let's go right back to the charts. Take a look at the 10-minute S&P chart. We are seeing a little bit of a late day push here on the S&P. So notice again, we kind of opened here, had a little bit of a sell-off early. I think that was kind of beginning of the month, unloading by institutions. Then once that volume dries up from the institutional sell side, the markets floated up, sideways, a little chop, and then a little late day, probably short covering day trader rally. Just to speak on that, essentially what a lot of times happens in markets that go sideways, there's a lot of shorts that start to short the market, like kind of newbies on the day trading side. And a lot of those day traders, they have liquidity and they're using the 4x margin. You get 4-to-1 margin when you're day trading, but you have to close it out by the end of the day. You can't hold 4-to-1 overnight. And so what ends up happening is when you don't get that drop and they don't get to cover down here for a profit, they have to cover at the end of the day, and that's why sometimes you see that late day short squeeze. Okay, by the way, not a huge move to the upside. What are the key charts that we want to look at today? I do want to touch on NVIDIA. NVIDIA started out with a little bit of a flush today, but did recover here. It is flattish on the day, maybe slightly positive. One of the things to notice is the time count factor. Now, this is in my methodology that I teach. It's called time counts. It's something that is unbelievably scary how often it comes about. It's a 7 count. Not going to go into in depth more than that because you have to learn it from the course. But what we do see here is a down move, and then 1, 2, 3, 4, 5. It was unlikely we would see the big flush today because it wasn't at the time count just yet of the full maturity of the bear flag. So I would expect, again, I do ultimately think it goes down, but you need a couple more days like this, and then the bigger move can come in. Now, again, how low is NVIDIA likely to go based on charts? Tough to know, but we do have some levels right in here, and then the big one is right back here. I don't know, again, I do think that probably within a few months we're back and retesting this level on NVIDIA. But either way, just to be clear on this, this is a bear flag formation, reversal candle, confirmation candle, continuation candle, sideways consolidation. That is a classic bearish consolidation pattern. So probabilities favor continued downside. One of my big ones today is Nike, guys. Amazing move on Nike here. So Nike on Friday was down 20% on the back of earnings. And basically, their earnings were pretty atrocious, but still 20% is one of the biggest moves you have ever seen in Nike historically. And Nike's been around for decades and decades and decades. And so the kicker here was this. What did I realize? Why did I pick this up on Friday And why did I hold it overnight, even with the live day trading room, the Apex live day trading room? And by the way, it might be the first trade I've held overnight this entire year. The answer is this. What I knew is that when you saw this sell off on Friday, part of the selling and the intensity of the selling was that institutional money managers, it was the end of the quarter. And at the end of the quarter, they did not want to go in and send statements to clients showing them that they held Nike for that quarter. So what they do is they do what's called window undressing. So there's window dressing where they put like the best performers in their portfolio to make it look super nice for clients. And then window undressing is where they dump all the crap out of their portfolio. And really on Friday was the last day to do that for these money managers. So there was a lot of selling pressure here, which then means you usually get a reflex bounce to the upside come Monday of the new quarter. At least today was the Monday of the new quarter. And so that's one of the reasons why I was confident we get a bounce. I'm actually still holding this with members because I do think it continues to go up. And again, I think that there'll be follow-up additional upside as you see more and more money managers actually start to add this to the portfolio for a bounce. So just a little interesting insight into what went on there with Nike. I also think that WBA is one to keep an eye on as well. This one continues to be on the downside here under pressure, but nonetheless, it is one that is interesting to me. I'm going to get rid of the pre-market data. This is an intraday chart of WBA. We can see a wedge pattern here. Tomorrow, we're going to look for a break above this wedge pattern, which looks around the 1165 level. If it can get through that, you actually could get a decent retrace bounce. Not the same caliber of company, unfortunately, anymore as Nike, but nonetheless, it is a chart that is majorly oversold on the daily chart as well. Chewy today. We got to talk about Chewy, guys. So Chewy this morning, it was revealed that Roaring Kitty had basically purchased like $245 million of the stock. I'm not sure if that was partially in options or if it was all using funds in his account. But either way, you saw that big gap up here on the day, and then it sold off throughout the course of the day. And I think the big takeaway here is that the more times you reveal, and this goes to big names, but when you keep on pushing out kind of these pump plays that are highly, they're highly volatile, and you have these big moves like this, and then they reverse. And we saw this on GameStop. I mean, look at where GameStop was like at $65 at one point pre-market. It's now down in the 20s, right? And so more and more people get burned, which means his plays will go down even faster. They'll pop, but then they reverse because people got accustomed to saying, oh my gosh, if you don't take your money right away and go, these things crash down. It's almost like a self-fulfilling prophecy. And so the more you do these pumps, the more sellers just wait for the pop and just slam into it, and the faster these things roll over. So we'll have to watch and see where Chewy goes. Now, he might tweet about it again tonight, who knows? And that might cause a little bit of a pop in the stock, but it's important to understand the psychology of investors. Investors, once they get burned, they become a little gun-shy. What happens is when they get burned again and again and again, more and more people say, all right, it's popping pre-market. Let's even dump pre-market. And then look at once it opened. I actually think there's a lot of institutional selling here too, knowing that these things are not going to stay up. And so the institutions pounded it down by shorting it as well. And that just brings it right down to this level. Now, again, it looks like it's making a little base here. Maybe it does get a little bit of a bid in the next day or so. We'll have to watch and see. But it's an interesting kind of concept to understand of what happens as these pumps are done. Weirdly enough, it's kind of like companies that do those pump and dump type things where initially the plays really move, but once people get burned more and more, they move less and less and less until they don't move at all. All right, Bitcoin, let's go into Bitcoin real quick here. A little bit of an uptick on the Bitcoin chart. Lots of support here. You are at resistance, so this is a pivotal level for Bitcoin. Where can it go? We're going to find out in the coming days. I do ultimately think a lot has to do with the stock market. So again, I know people don't want to say, oh, it kind of relies on the stock market, but if the stock market sells heavily, then Bitcoin's going to go down. If the stock market keeps making new highs, eventually you got to think Bitcoin can break out to the upside as a risk-on asset. In terms of the chart, just watch to see. Does it break above this line here and maybe get to 64? That would be bullish. Once you're above there, maybe it retests 72. If it breaks here, it goes to 56.5, and then potentially if it breaks there, you're going down to 50. Okay. Next chart, gold. Minimal price action on gold. little bit of a wedge pattern forming. Which way does this ultimately break? Does it break to the downside here, or does it break to the upside? It's just holding. And if you look at this, right, I mean, even from over here, from this high, you came down, and then since then, look at that. I mean, basically, that's what you've done. You've just gone sideways with chop in gold. So we have to watch to see which way does it break. Whichever way it breaks, I would expect a major move in that direction. Breaks to the upside, should retest your high here around 24.40. If it breaks to the downside, 21.90 down there is your likely target. But again, this is a classic wedge pattern, which is consolidation. Then you look for which way does it break. That's your bigger move that would likely come. Now, oil here, check this out, guys. So I've been watching oil on this chart for quite some time, talking about how 83-ish, give or take, is a major level. I have 3 trend lines that are converging here. I actually think that oil at this point is finally at its max or close to. I mean, could it go a little higher? Sure. But ultimately, when you have 3 trend lines converging, and by the way, you can see this high up here, down to these highs, and we're right in there. Then you take, this was a head and shoulder pattern that I was watching. This is what's called the neckline. That's right there. And then you have this low down here, right through all of these lows, right through these highs here, and it all converges right there. I mean, this is, again, that is a huge zone. And so my guess is you likely are near a short-term top on oil. Look for this to potentially start wiping out to the downside, especially if the jobs data this week comes in weak. If we see misses on the jobs data, it's going to tell you the economy is slowing, and I would expect oil could really take a hit to the downside. So I'm going to watch this tomorrow. We'll see where it goes on oil's front. But really, at this stage of the game, it is something interesting to watch to see if this level can hold up. Lastly, I'll touch on natural gas real quick, guys, which last I checked was down pretty sizably. Take a look at this, guys. This is a pretty big breakdown on the chart here. So this was a little bit of support, this low. We went right through it today, right through here. That tells me that your target is likely on point here, which is going to be this zone right here. And we're looking at around the $2.15 level. Now, you might be getting close to a little bounce just because you've had 2, 4, 5 down days in a row on natural gas. But ultimately, for me as a buyer, as a potential buyer, don't have any right now, but a potential buyer would be waiting patiently right there to look for it to flush right in there and then pick it up to the upside for a technical bounce. All right, guys. As always, I'm here to deliver what Verified Investing promises you, which is data, charts, unbiased, technical analysis. That's what we're here to do. Leave the mainstream media behind, the narratives that they spin. Leave the hype from social media behind. Verified Investing is here to give you the data and the charts. Thank you so much for tuning into The Close. Don't forget, tomorrow morning, 9 a.m., I'll be live with the game plan. Take care.